please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, there's been a leg down. There's no taking away from that. 10,740 on the screens now. There's a 28-point reversal on the Nifty from the flat line that we are now looking at. Just talk about a couple of stocks that are sort of contributing to this. Some more selling on ICICI Bank. The stock was anyway weak, but now it's looking at a slightly deeper cut. SBI also has changed course again. SBI was looking at a recovery, but that recovery has not quite worked out. It's trending lower. And of course, we've already highlighted Reliance, which is down over 2%.
Almost 3 now,
Almost.
at the day's low, 963.
Yeah, in fact, let's just take this up with Ashwani and Mitesh, both of our experts still with us. Ashwani, I mean, it's flattering to receive this market, and suddenly now the gains are coming off. You're reading.
See, after yesterday's rally, today was expected to be sideways. Because yesterday, lots of expectations tend to get built up because of, RAL, AGM, etc. And that's why it was giving up. I think in the morning I had mentioned that don't buy it above 1,000. This is doing its 930, 1,020 range. See, as long as we are broadly holding this 10,730, 740 range, it could restart the rally. Today is a lot of things bunched up together, global weakness, bank expiry, Reliance, etc. So I won't call the rally off, but definitely today is a sideways day, very narrow range day. So tomorrow we could have big moves on the indices. Having said that, Hindustan Unilever is a buy with a stop of 1675, target of 1740. Reliance Capital is a buy with a stop of 367, a target of 384, and ITC is a buy with a stop of 268, target of 280.
Okay, Mitesh, what would your thoughts be? Half an hour to close.
I have one.
Yeah,
one buy and one sell. In fact, one of the cement names, which joined the rally, I think just now, I think is Dalmia Bharat. That's a buy with a stop below 2300 and look for targets close to about 2410. While ICICI Pru Life, I think it's been weak stock, slightly underperforming, but today again trading below key pivot levels of 370. So I would sell that with a stop at 372 for targets of 358.
Okay, I just want to run through a couple of stocks. These are both down and up, but with volumes. So I think we of course already discussed Titan. HEG, if you can put this up, is down today. When it's up a full 5%. That's the daily limit. It's down almost 5. USL, United Spirits, that's down. Nalco, I saw, was lower. And these were lower 15 minutes back maybe. So with the market coming off, they're down a bit more. Hathway is the other one. Hathway and Den. Surabhi was, of course, discussing that earlier. Look at Radico. That is also selling off. I mentioned TV today earlier, and then there's Bombay Dyeing, which is down at this point. Okay, so that is essentially what is lower. Now the stocks which are higher, there is CESC, if you can have that up again, only mentioning things with volumes. Saregama is higher, that is CESC and then Saregama, but have taken a bit of a leg down with the market coming off. I think we just heard Dalmia Bharat from Mitesh, that is also doing well. Motilal Oswal, it suffered quite a bit of damage. It's actually up today. There is Gati, DCM, Shriram, Gru. There's something like Naukri, that's InfoEdge, and there is VMart, which are stocks which seem to be bucking the trend in an otherwise lackluster kind of market at this point in time. Surabhi.
That's moving. Enables housing finance suddenly coming off and falling off the cliff. One would have to say that the mid-cap market, the vulnerability is so clear. Just look at this. The slightest sign of a shake-up and straight away you're down 150 points on the mid-cap index. The market breadth is now very clearly favoring declines. Those lines are now widening as we get towards the close. Okay, Abhimanyu, let me take your thoughts in on both United Spirits and United Breweries. Stocks under pressure, they have been range-bound as well, particularly United Spirits. What would your view be for investors?
Yeah, so I think so in today's Karnataka budget, we have seen an increase in alcohol prices, increased taxation from the government, and Karnataka, especially Bangalore being a key market, it's a clear negative, and we are seeing this kind of reaction from the investors for these two particular stocks.
Okay, Abhimanyu, any interesting mid-cap ideas that have crossed your radar? Because it's a tough market, the mid-cap market, to sort of traverse in these conditions. Any ideas that that you've recently seen?
So one of the ideas that we obviously like is the media play. I think so. We are mentioning about TV Today being down today 5% after yesterday's 10% odd rally which happened in the stock. So I think so. If you look at the overall media space, as we see that the digitization improves going forward and the cost reduces, we are likely to see a lot of winners from that particular space. So within that, I think so TV Today could be one interesting stock to look at, and at this price point looks quite attractive to us, considering that the growth opportunity is quite good. And as we see, because of this new phone of Reliance, coming, the penetration will increase further, and all these content content providers should do pretty well going forward, and one could buy into today's weakness in these particular stocks.
Is it, I mean, the expected spending on account of elections also a big one?
Yeah, absolutely. I think so. See, we have seen a paradigm shift happening on the digital side, where people are now consuming more news digitally relative to other mediums like print as well as TV. And with the elections coming up, I think so it could be a clear beneficiary for a company like TV Today. They've already acquired their digital asset from the promoter company, and going forward the growth is likely to be pretty robust, considering that Aaj Tak is doing decent on the Hindi news side.
Fair enough. I was talking about Tata Motors with Anshul earlier. Abhimanyu, do you have a view on Tata Motors?
So I think so. It is like every quarter we feel that Tata Motors looks more attractive because of valuations, but the management always surprises us with one or the other thing. 3 to 4 quarters back it was about hedging leading to losses, and now it's about one, that there is a significant increase in capex which is happening. Also today the clear story which came out was that when the CEO of JLR met the British Prime Minister, they talked about a significant cuts that could happen if Brexit doesn't happen in a proper manner, and if there's a hard landing for the UK market. So that is a clear negative which is there. So right now, if somebody is owning the stock, I could say that if you have been patient, so be patient for a bit more. Otherwise, it doesn't make sense right now to buy new, because clearly the JLR models are not doing that good in the European market, and that is leading to them to reinvest continuously in order to grow going forward.
All right, Abhimanyu, we'll leave it on that note. Thank you very much for being with us on the show today. You've just got to get back to a couple of these stocks, and IDBI Bank has to be one of them. There seems to be absolutely no ground in place, no bottom in place for this one, at least today. It's just wave after wave of selling. You can see it's just been absolutely no sign of buyers. Now down 8.5%. Other stocks feeling the heat this afternoon: Dilip Buildcon. We've discussed USL already. Bombay Dyeing is down on 5% circuit. And obviously a couple of other names as well on the broader side of the market. If I talk about slightly bigger stocks, then some of the Adani names are also weak. Adani Power, 4% on the downside today. So this is where the pressure points are. Mitesh, actually, I just want to get your take on something like maybe an IDBI Bank. Could it be a good short now? Any views on this stock?
I think avoid trading. One, it's very news flow driven, I think, in the short term. So, and the chart is also, I think, the stock has fallen, it's quite oversold and still is not showing a sign of recovery. We don't have very clear signals. So I think rather avoid this and go into cement pack, which is clearly looking on the upside after having gone through a correction. There are some better quality names out there. So I think more comfortable trading those names.
Okay, 14 points lower on the Nifty. So, I mean, it looked like it was becoming a bit of a bigger cut, but it's contained so far. So it's actually on the recovering path now. You can see that last couple of candles. We take a very quick break here. We come back and discuss more markets. There's 15 minutes to close. Prakash Diwan is joining us in our studios as well, along with our other guests. Back in 2. Okay, welcome back. So 20 points again. It's essentially whiplashing, but very small ranges. It's not expanding on either direction at all. Prakash Devan is also with us. Prakash, we spoke earlier after the RIL AGM. Anything new catching your eye as far as markets go?
No, I don't know. So Reliance seems to be definitely a non-event of sorts now. But there's nothing very disturbing about the announcement. In fact, I think there could be a slow, gradual, latent up move because of the refining side of the business looking slightly better. As we get closer to results, probably that will kick in. What the market's probably telling us very clearly now is we will have to starkly wait for the earnings season to give direction, because there's absolutely no direction. You see the range in which the Nifty is beat today. It will be a huge range of 30 points, 35 points. And there's absolutely no interest in any of the counter except for where there's a little bit of a sliver of news and things like that. So I think Monday morning, probably we'll wake up to a lot of announcements from the Trump administration on the tariff war. So, that could probably set some sort of a tone either ways. But apart from that, I think it's just a hum and oh market. Nothing much changed. Reliance AGM was supposed to be a big thing that could have moved probably the Nifty because of the Reliance weightage, but that also seems to have petered out.
Ashwani, I want to discuss this Titan selling with you. I mean, stock's down almost 6%, just when it seemed that some momentum is coming back and that the overhang of the sale by Mr. Jhunjhunwala is over and done. Today's big sort of red candle, what does that do? Where does it leave the stock, and what would you tell traders to do with Titan now?
Well, this only means that the selling happened because of some reason. And once we break the 200 at 830, I think we could easily lose 100 points fairly soon. So it's definitely not looking good at all. And people who can't take 100-point downside need to get out. On the market, just I want to make a point that 10,740 has been saved. So that way, the trend hasn't been broken. And a resumption of trend tomorrow or whenever is possible because the decline did not really change anything. So that way, the market still remains positive. But there are certain stocks which seem to be in trouble, including Titan.
Prakash, you want to comment on this? Because I'm just thinking, even from an investor's point, not a trader's point, what's the next trigger for Titan? Demon is over, that whole move away from the likes of PC Jewelers. But I'm saying that governance premium that Titan always enjoys, isn't that move kind of over? So now what's the next trigger that can substantially take the stock back to 900 plus and maybe even higher? Or does Titan just get into a range now for the next couple of weeks?
No, possible. Next couple of weeks very easily, because
or maybe months, I don't know.
The expectation management that the management has tried via its warning on or this indication that the quarter has been fairly muted and because of the reasons that they've cited. So till there's a very clear change in demand and an improvement in market share, which numbers will tell us maybe with a little bit of a lag effect. I don't think Titan comes back into that 900 plus, 950 plus kind of a zone very readily. So you'll have to give it some time. In fact, this is the same thing. Prashant was talking about Tata Motors earlier. And look at today morning when it opened, there was so much of a negativity because of that one statement that a hard Brexit landing could could be really bad for the company. Now that is such a conditional statement. If Brexit leads to a hard landing, last time also nobody could make out how Brexit would pan out, and everybody actually ended up getting it wrong. It's too early to say this is what's going to happen if Brexit happens. So I think Tata Motors, the slightest of negative news and people kind of come out hammers and tongs, wanting to push it down.
I mean, if I were the CEO of JLR and I was talking to Theresa May, I would say there's 4 billion euros at risk.
Exactly.
I mean,
so this is more of a political.
Try to scare the wits out of her.
This thing, yeah. It could be a lobbying attempt. I mean, it could be some sort of attempt to kind of forewarn on certain things. But look at how it's recovered. Also, even on a bad day like this, Tata Motors isn't lower than what it started off with, which means
it's, by the way, hovering around that Feb 2016 lows. 16 lows, yeah.
So I think any positive news could actually take it down because it's under-owned completely. I really don't know any large institutions who still have Tata Motors on their portfolios. So. I mean, not that they're going to come back in a hurry, but probably that would happen only once it crosses that 330, 335 zone convincingly and shows some sort of irreversibility in terms of operations. But that could happen. I mean, there's no reason why you could write it off so easily.
And they took analysts to London also for the first time, right? I mean,
so
that didn't help.
If we're going to move out, then maybe we'll be in the next conference call at some other exotic location. But anyway, all right, we need to take
just a quick point. Titan, I was just looking at it went up 3 times last year.
It did.
I mean, 330 to 868.
So no taking away from that. Yeah, no taking away from that spectacular rally.
And it's down just 2% this year, right?
That's true. No taking away from it. Okay, we need to take a very, very quick break. We're running almost into market close. It's 3:22. As we take this break, we'll leave you with some opinion that we picked up from Shailesh Raj Bhan of Reliance Mutual Fund. He manages a couple of very interesting funds at Reliance MF, including their pharma fund. Take a look. We'll be back with the market close.
The consumption space has, like you said, many variables. This MSP is an important variable supporting the rural space. And I think the rural space was already doing well in the last 12 months, so it actually gives the uplift to this particular activity. The other areas of the consumption space, like consumer staples, though are expensive today, but you have consumer discretionary, which is much better place. You have media and entertainment space, which is a part of discretionary, which is again a much better place. Hospitality, which is a decent sector, which is much better placed. So you've got many subcomponents of this sector. And as we analyze it, nearly 30-40% of India's market cap or 30% of India's market cap actually just falls into this particular area, which makes the opportunity far more diversified than any other pure single sector product. The most significant space left to turn on is the corporate banking sector, or the corporate lenders, if you may call it. I think with what has happened in the last 3-4 years, and especially in the last 12 months of aggressive recognition, aggressive provisioning also by leading corporate lenders, I think the opportunity for leaders in this category to accelerate on improvement of credit growth over the next 3 years is tremendous. All these guys are sitting on substantial operating leverage, whether it's top line growth, cost containment, then you have lower provisioning, and the whole cycle of, as you call, the expected cycle of capex, continuing from the government side and starting from the private sector side, yet to play out.
Welcome back. We've got less than 5 minutes to go till markets close out. Ashwani, so I did hear you say that right now the uptrend hasn't really broken. But from tomorrow's perspective, tomorrow's point of view, what do you look at? Because the bank rally kind of stalled today. Then today was a good day for the ITC and levers of the world. This whole daily rotation that goes on. So in terms of just nifty stocks, anything that you'd be willing to back?
See, this rally has been led by banks, and till this rally continues, I think banks should do well. So today also they're up 70 points, they are not down. So FMCG, banking, these are the kind of sectors you want to back on the upside. It's clear something is broken on IT. So possibly IT could have another down day, while banks at lower levels could find buying. But we've just had a 2-day rally, so possibly there is more in this upswing. One excursion to 10,850 is probably left. So today has been a good consolidation type of day, where probably some weak hands have been shaken out.
Ashwani, metal names, what's your sense? I mean, Tata Steel is selling off. You can look at, I saw Nalco earlier, Jindal.
See, global sectors like IT, maybe some profit booking on pharma, metals, they're all going down. So right now in this upswing, It's the domestic sectors which are kind of working out. So my sense is metals is in a fairly strong downtrend and rallies will get sold there.
Any thoughts on Info Edge, Prakash? As we were winding down for the day, stock surging 6% higher. Lots of news surrounding this company, including their latest little sojourn into Policy Bazaar.
Yeah, so I think this business always relies on aggregation of different properties, different domains, and they've done that very smartly. They've used one big cash cow to fund the other acquisitions and push those. So they are in a spot which is very, very uniquely placed. So there's no competition for the near future, and I think the kind of multiple that they would get would continue to be maintained or improved. So. But buy on dips is probably a better strategy because the news flow has already brought about 18-20% of an up move in the last couple of months.
The other name that surged is Matrimony. I mean, I think we saw a pretty big surge. What was it, day before yesterday or something?
It was around Tuesday, and then it had a down day yesterday, and
it got to a high of 875. And now it's at about 740 odd rupees. Of course, it's underperformed hugely over the last, many months now, actually. Okay, so this is, just looking at single stock futures, IDBI, Titan, United Spirits, Infosys, Vedanta, and UBL are the top losers. In the future segment, India Cements, Yes Bank, CESC, Ultratech, and Ambuja, Asian Paints are the top gainers. So it's a pretty staid kind of a list, of course, unless you find IDBI exciting on the downside. Okay, just a quick wrap up as far as the large caps are concerned. There is about a minute and 10 seconds to go, so maybe we should start wrapping up. The large cap stacks up like this. So we'll end about 15 points lower on the Nifty, around there. The Sensex will end on about 60 points. That's about 0.18%. Cement stocks did very well. An odd banking name, private banking name like Yes Bank stood out. I mean, IT, it's kind of split. TCS was up almost 1%, whereas Infosys went completely the other way. And there was ITC, which stood out with a 3% kind of a gain. Auto continues its move. I mean, Maruti and Hero, actually include Bosch there as well, which did pretty well in terms of gainers. On the downside, Infosys, Tata Steel, Reliance Industries, RIL will close at 964, almost 964. DLF was down 2%, Sun Pharma down about 2%, and then the Tata Motors of the world, which end down about 1.33%. So that's the large cap pack for you, 16 lower. But mid caps and small caps.
Mid caps, small caps, all over the place, really, Prashant. I'll start with cement because cement really has been a strong sector today, no doubting that. So Ambuja, ACC have also put on about 3% or so. Then other names like Dalmia Bharat, India Cement are also up and about quite a bit. I'm talking about 4% a piece on Dalmia Bharat and on India Cement. So decent moves coming in there. Ultratech coming from the large cap space itself was up 3.5%. So lots of gainers on the cement side of the market. But getting back to some more interesting mid caps, Saregama did a 10% move today. Gati was up and about 8% up. You remember yesterday was a good day for all cargo logistics. That's because promoters bought in from the market. Today it was a turn of Gati, 8% up. First Source was the outlier from the mid-cap IT pack. First Source up 6%. Look at its peers like NIIT Tech, Hexaware, KPIT, Tata Elxsi. You won't find the rally there. All of those stocks are down between 1 and 2%, but sort of a different move altogether on First Source with a 6% up move. Let's just quickly move through some of the other IT names as well, including Hexaware and NIIT Tech. All of those stocks have ended negative. Then if I move on, quickly talk about some more gainers. CESC has managed a 3.5% up move for itself today. Some buying on Muthoot Finance, 3% on the higher side. Even a Max Finance was up. Max Financial was up about 3%. LIC Housing Finance managed about a 3% up move. Some of these NBFCs were interesting to look at. However, speaking of NBFCs, come down to Ujjivan and Equitas. Obviously, some sentiment rub-off on the farm loan waiver announcement from Karnataka. So those stocks have ended close to the flat line. Recovered from the lows of the day, but nonetheless, Equitas was still down about 2.5%. 8K Miles, again, today is one of those up days for this stock. It's become extremely volatile this week, the stock. Today was a 7% up move on this one. If I talk about the losers, you've got to start with Hathway and Den. Both the stocks down between 10 and 15%. IDBI Bank has lost about 7%, so these are the big losers on the way down. Again, fallout of the Karnataka excise hike, so about a 4% cut on, actually 5.5% cut on United Spirits. Even Radico Khaitan is negative. United Breweries has ended about 3% on the lower side. Smaller stocks like GM Breweries also out of favor and flavor today. So most of the liquor stocks have been lower. PC Jeweler has lost 4% for what it's worth. It's much bigger. Pure had, of course, a much bigger cut to deal with. I'm talking about Titan. These are the major stocks on the lower side. Let me quickly check on the futures list if there's anything I've missed out. Yeah, largely this is it. Nalco has also lost about 3.5% today. Not a good day for the IDFC twins, both IDFC Bank and IDFC. Also losing 3%. So mid caps, I guess, Prashant, we can safely say, still in the doldrums as far as the mid caps go.
Oh yeah, absolutely. Ashwani, I mean, as we come back tomorrow, what would your thoughts be on the index? Bank Nifty still, you would expect that rebound?
See, it's a narrowing market, so rebound. I think Bank Nifty still can get up to 26, 700, 750 thereabouts, and Nifty probably, should get above 10,800, 820, 850 once at least, because this rally is hardly, 2 or 3 days old, at least on the Bank Nifty. So that way, time-wise, it's not time to turn, but chances are that tomorrow you should have continuation. Today, you can call it a consolidation after a trend day, and generally speaking, the third day is often a trend day again.
Okay, so yeah, that'll take us right to the top of the current trading range. Mitesh, your thoughts? I mean, your call today was cement, and that worked out very well. Tomorrow, anything specific that you'd like to bank on to begin the day?
I think to begin with, I think I'll continue backing cement stocks, and that apart, I think, it will be a stock-specific market. I still don't see much of, traction coming in on the indices, and while there is mild expansion happening on the intraday charts, I think I'm not sure whether it has the strength to get past the edges of the boundary. So maybe we'll head towards the upper end of the range, 10,830, 850 for the Nifty in the coming few days, and 26,750 thereabouts on the Bank Nifty. But let's see, and then we'll see if we have the strength to get past those levels. Otherwise, it remains in a range-bound market, and we'll be idle to take profits around the upper end of the range.
Okay, all right, gentlemen, then we'll wind it up on that note. Thank you very much for being with us and taking us through market close today. We will be in touch with you. Right now, a quick break. On the other side, excerpts from Mukesh Ambani, Chairman and MD of Reliance Industries, his address at the 41st AGM of Reliance Industries. Stay tuned. Welcome back. At the Reliance Industries 41st AGM, Chairman Mukesh Ambani announced 215 million subscribers for Jio and the launch of a new phone. Ambani showcases a huge digital push for RIL with thrust on e-commerce and retail and also education, agriculture, healthcare. Kritika Saxena joins us with more details. Kritika.
Well, it was all about Jio once again in Reliance's 41st AGM. So to begin with, let's go through the highlights one by one. Jio has crossed 215 million users. That's the first thing that Mukesh Ambani pointed out. Jio phone has touched a base of about 25 million. For the Jio phone, they have in fact announced a couple of things. One is that Jio phone 2 has been launched for 2,999, and they have announced a Monsoon Dhamaka, wherein you can exchange your old Jio phone for a new one for a price of 501 rupees, effectively bringing down the overall price that you spend. Now, the big launch is the Jio Giga Fiber launch. The registration for this will be started on the 15th of August. This is essentially bringing in and creating the largest wireline broadband network in the country, and Mukesh Ambani hopes in the world as well. In the near term, they are hopeful to connect 50 million homes, and what they say is that this will lead to a significant value creation. So in terms of revenues, yes, this is one of the big bets that they will be making. This will be launched in about 1,100 cities in India to begin with. Now in retail, the big point in retail that they made, over and above revealing that they have seen a growth of about 100% on a year-on-year basis, they also said that they are looking at integrating the offline and online model. So what that means is they will use digital capabilities of Jio and the offline footprint that they already have in retail and create an omni-channel marketplace. So what they call it is new commerce. They are not calling it e-commerce, they're saying new commerce. What will happen is that the digital connectivity platform will serve as a foundation to build a new commerce, which will be for media and entertainment, education, agriculture and healthcare. Lastly, they did raise a point on the gas production target. They are looking at touching 30 to 35 MMS CMD by 2022. And they have completed two significant projects. One is the world's largest paraxylene complex with a capacity of 4.2 billion tons and the largest off-gas cracker complex in the world. So yes, about 10% was about the hydrocarbon petrochem business, but what Mukesh Ambani says is that consumer is going to be the next big bet, and in the next 1 decade, they are expecting consumer to be as big as a traditional business, which is the energy, the material and the oil and gas business.
All right, Kritika, thank you very much for that. On that note, let's hear out what the Reliance Industries Chairman and Managing Director Mukesh Ambani had to say on the 41st AGM.
Our profits, net profits, grew by more than 20.6% to 36,075 crores. Reliance's earning profile underwent a fundamental change this year. The company's consumer businesses, Jio and retail, represented about 13% of the consolidated EBITDA, up from a mere 2% last year. Reliance has reached an inflection point. As our golden decade rolls on, our consumer businesses will contribute nearly as much to the overall earnings of your company as our energy and petrochemical businesses. Jio is a customer-obsessed organization and will work harder to make every customer remain satisfied always on our network. We have more than 25 million Jio phone users in India. We are now taking the Jio phone to the next level with added capabilities and functionalities. The company has already invested over 250,000 crores for creating state-of-the-art digital infrastructure to provide mobile and broadband connectivity across the country with the largest fiber footprint. We will now extend this fiber connectivity to homes, merchants, small and medium enterprises, and large enterprises simultaneously across 1,100 cities to offer the most advanced fiber-based broadband connectivity solutions. We are calling this fiber-based broadband service the Jio GigaFiber. Starting this Independence Day, August 15th, you can start registering your interest for Jio GigaFiber through both MyJio and Jio.com. We will prioritize our Jio GigaFiber rollout to those localities from where we receive the highest number of registrations. Jio GigaFiber will be the largest greenfield fixed-line broadband rollout anywhere in the world, with rollout happening in 1,100 cities of India simultaneously. Today, we are introducing another attractive offer to feature phone users. It is the JioPhone Monsoon Hangama offer. Starting July 21st, they can exchange their existing feature phone for a brand new Jio phone for just 501 rupees. Also starting 15th August, our JioPhone 2 will be available at an introductory price of only rupees 2,999. Our 7,500 stores received over 350 million footfalls last year. 35 crore Indians entered our stores. Our revenues crossed rupees 69,000 crores, a growth of over 100% year on year.
Well, now let's shift focus to Karnataka. In his maiden budget, the Karnataka Chief Minister announced a 34,000 crore rupee farm loan waiver. Not just that, there were certain changes to excise as well. Rukmini Rao is now joining in with all the key highlights. Rukmini?
Well, Surbhi, like you rightly pointed out, was what was supposed to be like a really tough budget for H.D. Kumaraswamy. Finally, the details of what the farm loan waiver kind of is going to look like has been spelled out in the budget. 34,000 crores is what has been budgeted for farm loan waivers for this year, wherein farmers who've taken loans under 2 lakhs or up to 2 lakhs during the year 2007 to December 2017, which is a cutoff date. So these loans are going to be waived off. Of course, it comes with a caveat that now the government officials, the bigger farmers who've paid income taxes for the last 3 odd years, they will not be eligible, of course, for this farm loan waiver. Apart from that, also to incentivize repayment of farm loans, those who have promptly paid back their loans up to 25,000 rupees will be credited to their account, whichever is higher, whether be it the loan that they had taken or anything that is below that. Of course, also, in fact, if you're looking at resource mobilization, which the state government is looking at this year, there's been a hike in the excise duties of petrol and diesel by about 2%, which essentially means that there's going to be an effective 1.5 to 2 rupees increase in both petrol and diesel prices in the state. Apart from that, there's also been a 4% increase on Indian-made liquor, all the 18 slabs included. Apart from that, of course, very interestingly, also in keeping with the entire coalition spirit, none of the schemes that the previous Chief Minister Siddaramaiah had announced, the popular schemes, the Anna Bhagya, Kshira Bhagya, those will continue. And in fact, even the Indira Canteen, which is so much spoken about in the last budget, a few more Indira Canteens will also be open. But last but not the least, the farm loan waiver which Siddaramaiah had announced last year, which was attuned to around 8,100 plus crores. Out of that, about 4,100 had been rolled out last year itself. This year, a provisioning of 4,000 crores has been made, which effectively means the entire 8,000 crores of loan waiver of last year will also be implemented in totality this year. Back to you.
All right, Rukmini, thank you very much for getting us some of the highlights. In fact, we did catch up with some of the companies concerned, spoke with Samit Ghosh, MD and CEO of Ujjivan Small Finance Bank, as well as the MD and CEO of Karnataka Bank to understand the impact.
I don't think our exposure would be in danger, but as the Governor, Ujit Patel has mentioned a number of times, this kind of low farm loan waiver obviously impacts the credit culture. When you go to give a loan to a farmer, often the first thing they'll ask you is this loan going to be waived? So that kind of culture comes in. So that is, in the long run, it is bad. But immediately, obviously, the impact would be with the cooperative banks and the public sector banks. And hopefully, the state governments would be able to reimburse them in time.
In the short term, definitely it is a credit positive decision of the state government. We have to respect that because the state government has been able to come up to the expectation of the farmers. In the state of Karnataka, my agricultural exposure is around 12% of my loan book. That means around 4,400 crores exposure I have. And I have around finance to around 72,000 farming families in the state of Karnataka. So even a rough calculation of 72,000 families into 2 lakhs, I should be able to get back about 1,400 crores back. So that's a huge credit positive for my balance sheet as well.
All right, on that note, let's take a quick break. We'll come back with all the commodity market action with Manisha Gupta on the other side. Welcome back, and let's chat commodities now. And the major event that is going to unfold really is going to be the US-China trade tariff concerns that set in or kick in on Friday midnight. It will begin with the US actually putting tariff of around 25% on $34 billion worth of goods from China. And China is all set to retaliate to that as well. And we already have seen those lists from both of these countries. But that D-date actually arrives now tomorrow, which is Friday the 6th. The markets also would be watching out for any more retaliation. The other countries, if they want to be chipping in. And remember, the US has begun or wants to begin with the $50 billion worth of tariffs. It is being done in 2 stages. It has been split into 2. So 34 billion is one and then 16 billion is another. And US also, of course, has threatened with tariffs of around $450 billion on the Chinese products. So Friday clearly is going to be begin with a lot of jitteriness. We already have seen most of those commodities actually continue to decline in last many days. And today has been no exception, where you have seen that reaction come in for equities, commodities and currencies as well. Let's get in Azleen Ahmed of Argus Media, who joins us on the phone line now to get her view on the same as well. Azleen, we will talk commodity specific in a bit, but what is your sense on what the markets are awaiting for on Friday as the tariff really kicks in? What impact do you see that on the world trade?
Well, I think that the main thing on the oil side is just whether the 25% tariffs will be imposed on U.S. crude, where China will impose it on U.S. crude imports, because I think that's going to be quite a significant impact. I think that overall, the whole China-U.S. potential trade war could have big impact in terms of dampening the whole equity market, because it could escalate. I think the concern is that it could escalate, and that, as you say, it could bring other countries in. But yeah, it's anybody's guess whether the U.S. will pull away or whether it will go ahead with its plan to impose all this tariffs.
How would you look at an impact, as you said, on the commodities from this one? Crude oil prices, as you said, would only look at the products, which come, of course, in the later list. But the way we stand right now, would you see an immediate impact coming in for the commodities, or is it overall global jitteriness which really seems to be impacting here?
I think that we should see prices fall, because it will have an impact on the trade flows. So it's not just the jitteriness. It will impact on the demand from China and the retaliation from the U.S. So overall, it will, I think, have a negative impact on prices and commodities as a whole. I mean, crude is potentially in the second batch. There's no indication of whether China will actually implement the 25% tariffs on U.S. crude imports or not. But that in itself has quite significant implications. And what we're hearing is that some of the Chinese companies have already halted or held back buying U.S. crude just on the uncertainty of whether or not this is going to happen. So, I think the impact is already starting to be felt because people don't know what is going to happen. It's more the uncertainty, and that always has a negative impact on prices for all commodities.
So how are you looking at the US president's tweet, especially asking for OPEC to reduce the prices immediately, substantially increase the production, etc.? That clearly seems to be having an impact directly on crude.
Yes. Okay. Actually, the crude prices where we're seeing today are still pretty high. ICE Brent is just under $80. Just under $78. So it's still a very high price. So what President Trump tweeted at the moment doesn't have a dampening impact on the crude oil markets. But I think that the countries like Saudi Arabia and also Russia and some of the Middle East countries like Abu Dhabi are already announcing potential output increases. So I think that there is attempt by producers, not just OPEC, but also by Russia, to increase their production to maybe take the heat out of the oil prices at the moment.
All right, Azleen. So what you're saying is that the US president's tweet really are working. And we, in any case, have seen many of those Middle East oil producers, including Russia, looking to increase production. One, of course, to make use of the rising prices and, of course, for the market share as well. Thank you so much for joining us. Well, that's the view really coming in from Argus Media on commodities and on crude as well. But with that, it's time up on this edition of Closing Bell. Thank you for watching.